We have all heard the saying, making our money work for us. But what does it mean to have your money work for you? There are plenty of stories out there about high wealth people investing. But how can we make investing work for us without bringing overcomplicated strategy conversations in? For many people, investing can be a fun part of the financial journey. This is where you start to earn a passive income and you can directly see how your decisions impact your value. Let's take a look at what investing is and some of the ways you can get started in it. And please remember, nothing I say in this video is considered financial advice. First, it is important to know what investing means. It is easy to think of investing only related to purchasing shares and bonds. However, investing is any time you put money into a system in order to generate a profit. This system can include shares or bonds, but also real estate, businesses, or other ventures. Now, there are as many ways to generate a profit as there are different ways to invest your money. No two methods of investment are the same. And as we've spoken about in a previous video, there is no one-size-fits-all approach when it comes to investing. There are many things to consider when you are looking to invest your money. This video will only cover some of the basics for some of these methods. As always, you should do your own research and get professional financial advice before deciding if this strategy is right for you. First off, let's look at shares. For many of us, shares are the earliest memories we have of investing. Thanks to technology, investing in shares has never been easier. It can be done at any time of the day, and from any location you can get internet access. As the name suggests, when you purchase a share, you purchase a part of the company. Some of the companies can issue large number of shares, so the amount of company you own from a single share will vary. For example, the BHP Group here in Australia currently has over 5 billion shares issued, while the American technology giant Apple has over 17 billion shares issued. Shares can generate value in many ways. However, there are two main mechanics that influence this. These mechanics are growth and dividends. Value is gained from growth shares when a company's value increases. As a share is a part of the company, the value of your share increases with this company's increase in value. Your profit is realized when you sell the share in the future for a higher price than you paid for them. Some companies will choose to pay their shareholders dividends. When an Australian company elects to do this, they are normally paid twice a year. This may differ for different companies based in other countries though. The company will set aside a portion of profits, which are then distributed on a per share basis to its shareholders. There are people who use dividends as a form of income. While this can be a great source of passive income, the amount of dividends paid can be inconsistent. Some shareholders will choose to take the dividends they receive from a company and purchase more shares from that same company. This results in them potentially receiving more dividends in the future dividend payouts. People will often choose to purchase shares in an individual company, or they will invest in listed investing companies, known as LICs, or they will invest in exchange traded funds, or ETFs, which are a collective grouping of shares. Bonds are often associated with shares, but they are different as they do not give you a part of the company. They are a debt that the issuer has agreed to pay back after an agreed amount of time with additional interest. Bonds do not have to be held until their maturity, as they can be sold prior to full payouts. There are many things that can affect this payout amount, such as the demand in markets for bonds or interest levels. However, they are considered a lower risk investment tool with a more reliable payout. And as we've previously discussed, lower levels of risk are often associated with lower levels of returns. For this reason, people will often use bonds as a defensive part of their investments for when there may be uncertainty in the market. For many Australians, real estate is a common investment tool. The Australian Bureau of Statistics shows that more than 8% of Australian households have an investment property. This is often an attractive investment tool as it has the ability to offer returns from both growth and continued payment. Value from growth can be generated in many different ways. The most common way of growth value is realized when you sell your property for a higher price than you purchased it for. Housing prices have continued to increase over the past 10 years, with some states in Australia seeing average increases of more than 40%. These value increases have resulted in plenty of financial gains for people who have decided to sell their investment properties after holding it for a period of time during this increase. Another common way growth value is realized through property is by adding value to the property. Online DIY and DIY reality TV shows have given many people the urge to renovate their properties. While caution is advised when doing this, it can be an effective way to increase the value of your investment property over a short period of time. Now, depending on how you structure your investment, properties also have the ability to generate a passive income through continued payments. If the rent or lease paid by the tenant is greater than your mortgage and other costs, that extra money can be utilized as a passive income. It is important to realize that there are costs to investment properties beyond just the mortgage repayments. Taxes, insurance, or other property manager fees all need to be considered when calculating potential passive income earnings from the property. Cryptocurrency is another investment tool that is often utilized by many investors. Even though crypto is a relatively new investing option, there have been plenty of success stories of people seeing significant returns. Cryptocurrency is a digital currency, and as they are decentralized, the value is affected by many different variables. This unfortunately results in the high levels of volatility of cryptocurrency. While the total global value of cryptocurrency is over $1 trillion, the unpredictability makes it difficult to rely on crypto for long-term financial gains. Already this year, the largest cryptocurrency, Bitcoin, has fallen by more than 50%. Micro-investing is something that has recently increased in popularity. Micro-investing utilizes an important strategy of investing, and that is consistency. Micro-investing is automated through an app that will increase the value of transactions made and then invest that additional amount. People can also opt to make additional investments at different intervals. While the strategy used here can be the same used for shares, the automated nature and small values make this an attractive option for people who are just beginning their investment part of their financial journey. There are many ways to access micro-investing, with most major banks in Australia offering this through their apps. This is just a very brief overview of some of the more common investing options. There are plenty of other options available, and there are many more benefits and cautions that can be listed with every option than we have spoken about today. It is important that you do your own research and consider the risks involved before investing. Investing is a powerful tool within our financial journey that will often see us achieve our financial goals sooner than if we did not utilize it. It is something that is utilized from the ultra high worth to everyone else on their financial journey. If you have found this video helpful, please subscribe to Forever Finance so you will know the moment more helpful videos are uploaded. Please also consider liking this video so it will reach more people with its help. If you have something that you would like to see us cover, please leave a comment below. Thanks for taking the time to watch this video, and we'll see you next time.